This is a podcast from the Business Times.
There's a global demand increase per annum of around 6%, and that's projected to be into the 2030s. That's being fueled by Asia Pacific largely. So you're looking at the only real risk for people investing in whiskey is FX, because all whiskey is bought in sterling.
Irish whiskey, last time I checked, was the drinking of it, the demand, growing at a compounding rate of about 5-6%. Scotch whiskey exports alone grew by 37%.
The prominence of whiskey as an alternative asset has grown, and there's a cool romantic notion to owning your own barrel. But it's an unregulated, highly risky market, and Joe Public isn't encouraged to go into this. I reckon with the most expensive privately owned cask of whiskey ever sold publicly being a cask of Macallan that made more than $1.29 million in 2022, people just don't want us knowing about it. Welcome to Money Hacks, a podcast series by the Business Times, where we explore useful financial tips to help you on your money managing and wealth growing journey. I'm Howie Lim. And if you have feedback or an idea for a podcast episode, do get in touch, btpodcasts@sph.com.sg. Helping us today, Alexander Knight, CEO of the Whiskey Cask Club, a whiskey brokerage which was set up a few years ago in Singapore to facilitate the investment opportunities for Southeast Asia.
And we talk about whiskey cask investment, which is a very old alternative investment, and which is now termed as an alternative investment. But people have been investing in whiskey for hundreds of years, and Singapore was and still is one of the biggest transshipment points of whiskey in the world. So realistically, the whiskey market is growing at an enormous rate.
Some time ago, we spoke to Maxwell Nee about investing in whiskey. He's the managing partner of the Ueno Wine and Whiskey Investment Fund. And while they concentrate on whiskey, he has thoughts about investing in whiskey casks.
People have been using it as a storage of value for a very long time, hundreds and hundreds of years. And it runs its own race, right? Because there's a natural life cycle. And one of my most favorite things about these assets is that they're consumable. So, for example, if there's 50,000 casks made in your vintage that you invest in, 20 years later, there might only be 100 of those left.
Alexander Knight, however, only does whiskey cask investing. He finds the resale of bottled whiskey a lot more volatile.
We find that bottles of whiskey have a much more harder resale. Whereas with casks of whiskey, when people invest in a new make or a 10-year-old or whatever it may be, it's quite straightforward for them to sell those casks to either bottlers or blenders or other people who want to buy investment whiskey from them. Whereas with bottles, you need to find someone who's specifically interested in that bottle of 25-year-old Hibiki or Macallan, who's going to spend $10,000-$15,000 on it. Whereas ours is a B2B resale, so it makes life a lot easier for our customers to unload their casks when they want to.
Anthony Chung, co-founder and CEO of VinoVest, has words about whiskey cask investing as well.
So the intrinsic value of its age stops as soon as it's bottled. That's why it's important that when you want to invest in whiskey, you ideally want to invest in it when it's still in the cask, because every year that you hold on to it adds an extra notch to the belt of the whiskey, obviously being more rare because it's older, and also the taste matures and refines itself each year as well whilst it's in the cask, but that stops happening when it's put into the bottle. Bottles are very, very speculative. Bottles do move in price based on hot topic demand, what flavor of the month type of thing. But if you're talking about fundamental investing, something that's a bit more consistent with a longer track record, you generally want to stick to only investing in casks.
Earlier this year, protectyourcask.com was released to provide investors with clear and transparent information about their whiskey cask investments. Given the global whiskey market is forecast to hit $125 billion by 2023, we'll need all the help we can get. Here's Alexander Knight from the Whiskey Cask Club.
So what we do is we have a bunch of experts that we work with in Scotland who understand.
What makes them experts, though? Fancy taste buds and such.
Not really. It's mainly a data-driven business, as most things are. What sells the most, what is becoming more popular, what's becoming less popular. The people who buying and selling the whiskey in terms of distribution, in terms of bottles, they understand the ebb and flow of the market so that they can see what's coming, what trends are coming and what trends are waning. Realistically, the big brands that we've all known most of our lives are whiskeys that we can get casks of. So a lot of it is traditional, but there are some new makes coming out on the market. We have something called Lathmore, which we've got quite a lot of casks of, which people have been buying, which is made with the same barley as Macallan, which is called Golden Promise barley, which is a barley that's been around since the 60s. So it's one of those things that, we keep our eye on the trends.
Still to come. Okay, no. We find out what other risks there are to consider when investing in whiskey casks and the outlook for the sector. More in a moment.
If you've been a fan of the podcast Mark to Market, Wealth BT and Property BT, they are moving to a new listing, BT Correspondence. Look for episodes every Tuesday from October. All the insights and analysis and market trends, property, wealth, and soon mobility too. Powered by the Business Times journalism of Genevieve Kwa, Leslie Yee, Ben Paul, and Darren Wong. Because great reads should be heard. The BT Correspondence channel. Find BT Correspondence wherever you listen to podcasts.
And now, back to Money Hacks from the Business Times.
We've been talking about whiskey cask investing with Alexander Knight from Whiskey Cask Club. ProtectYourCask.com's been described as an educational anti-Scotch whiskey cask investment scam site to tackle questionable practices of some investment companies. Apparently, it comes after a number of high-profile rulings against cask investment companies by the UK's Advertising Standards Authority. This drew attention to misleading claims and murky language used in these companies' marketing. So what else can we do to be careful? Here's Alexander Knight from the Whiskey Cask Club.
We also work with people who have more data than we do in Scotland. So we all work together to make sure that when clients and when people buy whiskey casks, they're going to get the return on investment that we say. Of course, nothing's ever guaranteed. The idea that anything is just wrong. But we try and make sure that whatever clients buy, that they will be able to make their return on investment out of it.
Oh, I'm starting to get antsy about this. Feels as though it might not be enough to just read the fine print. But according to Alex Knight, it's still a safe investment to consider.
It's a cycle. It's not like buying equities, where if you bought Apple stock 20 years ago, you'd have done very well. But that boat has now sailed. Whereas with whiskey, you can buy a cask of new make tomorrow and you will make more or less the same percentage of increase on it that you would have done if you bought it 10 years ago. And that's something really important to remember, that it's a consumable. So once a cask is matured, it's bottled and it's drunk, if people want to drink more of that same one, they'll go and buy it the next day. And so every day a new cask is being filled. Every day a new cask is being matured for a certain period of time and then bottled and sold, which is why this is one of the most unique markets, because you don't have to buy a cask today. You could buy it next year and you're going to get more or less the same return on investment on it. And this is historically proven over the last 40, 50 years.
With the S&P 500 and equities being rather volatile of late, whiskey cask investing is looking more and more attractive. But with all investments, know your goals, know the market, and know the risks.
Of course, nothing's ever guaranteed. The idea that anything is just wrong. But we try and make sure that whatever clients buy, that they will be able to make their return on investment out of it. We do think that people should hold casks for a minimum of 3 years and probably up to about 10. Most whiskey needs to be sold by the time it's 20 to 25 years old because of evaporation, which is euphemistically called the angel's share, which means that once a cask of whiskey is purchased, once it's filled rather, and kept in a bonded warehouse for, say, 20 to 25 years, only half of that liquid will be left in the cask itself due to evaporation of about 1.5% to 2% per annum. But at the end of the day, most of the whiskey that's drunk is younger than 5 years old. something like 95% of all whiskey is less than 5 years old, and 1.5 billion bottles of whiskey are exported from Scotland every year. So anything that goes into a cask needs to end up in a bottle.
Here's the million-dollar question, though. Does one need to be a whiskey drinker to invest in whiskey casks? Here's Maxwell Nee from Owino.
I'm personally a whiskey drinker, so I speak from the target audience that we're talking about. I've always seen it as if you do invest in whiskey, you get two benefits. You either get to make money from your passion and be on the sell side. That's always fun. But also, when you invest in whiskey, what you're doing is you're essentially buying what you like to drink earlier at a cheaper price.
Well, it doesn't necessarily mean they need to be whiskey drinkers. You know, people know what they like at the end of the day. So if people are whiskey drinkers, then, you know, that gives them a bit more of a context. Most people understand that the older whiskey gets, the more expensive it becomes, and whiskey drinkers particularly understand that. People who don't drink whiskey see that it's a good investment opportunity largely. We also have a fund that's MAS listed here in Singapore. So if people want to have something that's a little bit with more oversight than buying a single cask and it being in Scotland, we can help them do that. There are limitations for accredited investors, of course, as most things are. At the end of the day, there isn't any whiskey experience required. What we do is we talk people through it, we explain it to them, we try and give people a solid grounding and education in how the business works and how they will make money out of it at the end of the day.
So last word, in or out?
In.
Thanks so much for your time, Alexander Knight. I appreciate your insights.
Thank you so much for your time today. I really appreciate it.
And be sure to get in touch if you have feedback or an episode idea. btpodcasts@sph.com.sg. I'm Howie Lim, and this has been Money Hacks from the Business Times.
This is a podcast by the Business Times. Find more BT podcasts at businesstimes.com.sg/podcasts or wherever you get your podcasts. This podcast is meant to provide general information only. SPH Media accepts no liability for loss arising from any reliance on the podcast or use of third parties' products and services. Please consult professional advisors for independent advice.